Alright, welcome back to another video. Today is Monday the 22nd of April, and I'm sure you can tell, but we're rocking a theme today. We want to see blue screens, nothing but blue screens. Maybe going in the red a little bit, but ideally blue screens in the end. So we have NAS 100 up here, and I'm on the 5-minute chart. And this was where this alert is at 17060. So that's the beginning of this gap that was formed between Friday close and Sunday open, and I am looking to see if price will come back to this area, fill the gap, and then possibly choose to go up. The reasons why. Alright, so let me give you like a breakdown of why I'm looking for this trade. So the gap is visible on the 15-minute as well. When we zoom out to the daily candle, you notice that Friday's low took this was Wednesday the 31st of January's low. So the candle on Friday took previous lows, so liquidity has been taken to the downside. Actually, two places, on the 31st of Friday, on the 31st of January, 31st of Friday, and the 21st of February. I ain't gonna be correcting myself when I say shibbiness. Y'all just like try to follow it, man. Right? I can't be giving these much correction. What's I say? Unapologetic. I kind of believe in, just letting things be. So try to follow along with you, bye. I ain't gonna be saying sorry. I ain't gonna be apologizing for what I had. And I'm gonna try to minimize my corrections. That doesn't mean that I can do stupidness on purpose. That means I'll force myself to not slip up so that I won't have to make corrections. Anywho, so we on the hourly and dropping down to the we can't do that one. Dropping down to the 4-hour, we can see not much action, like in terms of any liquidity that was taken here, except for this one here, which was Wednesday the 21st. So yeah, there is liquidity being taken here on the 4-hour. For the long term, short term, I guess this one here, which was Thursday's low, was also taken on Friday. So this is just the usual way I do my analysis, top down from the daily. I was already on the 5-minute because I was looking for an entry, but just for the sake of giving you guys an explanation on why I would be looking to take this trade, because I haven't taken the trades yet. So in terms of a bearish trade, let's see if there's any reason for this price to go down before I confirm my bias to the upside. So the trend has been bearish, so price is going down regardless for how many weeks now? Since the 11th of April, actually before then. Yeah, the 21st of March, we can see price has been on a downtrend since. And on the daily, before I do any more analysis, on the daily, it still is in a sharp decline, a steady decline, a steady sharp. And we have a fair value gap up here on the daily. Let me just see if I could just mark a line or something. Above there is a fair value gap, and well, this daily candle isn't done as yet, but the space between here looks like a fair value gap as well, and even above this candle, yeah. It's just not clearly visible, but it's there. Let me show you guys. So we can see this space above here, this fair value gap a bit more. It was before the 50%. It is a fair value gap that occurred after a high was taken. So yeah, it's a valid fair value gap. And we also see another one there. It's smaller. The line, like the space in between the candles, it's smaller, but it is still there. So it's something that we should at least be aware of and factor it into consideration when doing our analysis. So on the hourly, I can see momentum. You know which chart I'm on. I am on the daily, and I am seeing here on the daily an increase in momentum. Oh, by the way, I really want to start making these videos short, like shorter, trying to put as much value as I can without talking as much as I can, without explaining too much extra unnecessary that I can, if there's a fucking sentence. But if you know you would prefer these videos to be shorter or remain the same length, you can let me know. I'm trying to provide value for others who are watching the video and myself at the same time. That's why I'm trying to explain so much in detail. But bear with me, I'll be cutting out a lot of videos. Now on the daily, we can see the momentum to the downside. We can see fair value gap for a retracement for a further push to the downside. So that's clear. On the 4 hour, we also see prices coming into a fair value gap here. This fair value gap was formed before a low was taken, but not after a high was taken. So still just take this with a grain of salt, because price already took that long-term low here. No, wait, did it? Yeah. This on Thursday, price already took that long-term low, and this one here on Friday just took Thursday's low. So this was already the new low, because this took liquidity long-term, and Friday's low became the brand new low after this new low was taken. So liquidity to the downside is taken, liquidity to the upside is not. Price engineered this point, and let's say this point, there's another fair value gap here, and another set of points here and here. So there's all them different levels, and this is an intermediate high, by the way. This touch the fair value gap and keep tracking, so this shouldn't be broken. If this get broken to the upside, it's problem. Anyhow, we looking for price to either push this fair value gap here. I don't want to say that it's valid anymore, because all these candles don't touch it. Sometimes candles just touch the fair value gap and drop, but it's just not likely, you know. Like for example here, it touched the fair value gap and then had a big massive impulsive move. This, however, was before this low was taken. Now that this low here is taken, this fair value gap is the new low. So I'm just giving you all the reasons why I'm not why I am going for a buy and why I am not going for a sell, but I am presenting both facts about bearish and bullish movement on this chart to be able to make a better decision. So we see all these different liquidity points to the upside, fair value gaps that would suggest price would like to keep pushing further to the downside, and even the price action, the candles, the way they close in the wicks at certain areas also suggest that price might want to keep pushing to the downside. Fair enough. Going down back to the hourly now, this is where I left the analysis for the bullish outlook off, and I also would like to continue the bearish outlook here as well. So we're going to do both from here go down. In terms of a sell, So we have two relatively equal highs here and here. This one and this one. And price is now looking like it's coming back down. According to the strategy I use, I would like to see some type of manipulation. There is accumulation here, but I would like to see some type of manipulation, like a low being taken or a high being taken. Because this price did not break this high when it came up here and just left a relatively equal high, I like seeing when relatively equal highs be farmed, because I know it is going to be broken. That's something price don't left at all. If it's a one high or a one low, it might left it there and come back later. But a relatively equal high, double top and triple top and them thing, it might give you a double, it might give you a triple, it might even give you 4 tops, bro. But you best believe it, price is going to take that area. Trust me. Trust me. The amount of people that get a stop losses there or the pending orders or whatever, trust me, you can take it. So, right. So, in terms of, this cushion. In terms of movement to the upside, if price happens to break these relatively equal highs, there is still this gap up here that we might have to worry about. But like I said, I am not too much in favor of these fair value gaps to the downside, because it's the new low. There isn't any like fresher liquidity to be taken, and before it take out more long-term like lows, it might want to take out some type of recent liquidity to the upside so it could gain the strength and momentum to drop further. That's the way I look at it. Now, the bearish outlook is what I just presented, right? If it does, no, that was the bullish. If it does go up, it might just want to react right here and then keep pushing further. But there isn't much reason for it to turn back here and take out the lows, but it's possible that it does. What I think might happen is if price does come up, it's gonna take out this high, this recent high up here, because that's the recent liquidity. That's as on the 19th of April, Friday. So that was last Friday. Yeah. So let's watch. I haven't sent this trade out to the groupers yet, because I would like to see how price reacts here first. I can drop down to the smaller time frame and check it out. But even on the 15, it's not much, it's not anything clear to go off of, because like I said, price has just been accumulating. So we don't see any clear signs of up or down until, you know, significant areas get broken in a specific way or manner or whatever you want to put it as. But yeah, I'm still watching this chart. I'm going to give you guys an update once price either gets to this high or where my alarm is at that low. Let me just put it properly so nobody don't get confused. Alright, so is either price come in line with this high or this low, and then we go in for a trade. If not, then I don't have a trade today, and we just watch price. We watch it freaking consolidate, because it's a Monday, and you know Mondays be sometimes. Love them, but yeah. So yeah, I'll give you guys an update once we get in this trade. Alright, so we're back like 5 minutes later or something, and price has hit that alert. It's in the area of interest. So right at any of my areas of interest, what I like to do is drop down to the smaller time frames, and based on the price action that's happening on the smaller time frames, I'll know whether, you know, this is a trade I want to take or not. So We're here at the area of interest, and we drop down to the 5 minutes. On the 5 minutes, we see no action as yet. Ideally, I'd probably like to see some type of, let's say, accumulation or something, some high being farmed, a low being broken, and then that high that was farmed being broken, and then we look for a move to the upside. In terms of a sell, this price action, even though we have a fair value gap, like a small one here, I would say that this is less than 50% of the move, so this kind of looks valid. But let me see how it goes. Sometimes price goes straight back up from right here. It is do that. It is do that. Really do that. I had a buy limit set. It was like a little bit more down, like here, but I deleted it. I just want to see price react first rather than getting in, trying to be like at the lowest low or the highest high or anything like that. I don't mind getting in a little bit after the move already happened. I know where the move is gonna go. I know where it come from, where it should not go back to, and I know the amount of risk that I would have to put on the trade in order to still lose within my parameters if I do lose that trade. So I know Q1 price, Q1 man, you're good, we're good. So I'd say I'd leave the screen on, but I think it would be better if I just watch price play out, and once I enter the trade, come back and give you guys the reason as to why I entered the trade, because the analysis can still be right here. I ain't moving anything, and the chart thing will look different, just more candles. But yeah guys, an update. Just wanted to let y'all know that we at the zone, so we getting money together. I'm gonna update y'all in a minute. Alright, we back. So we are in the trade, just got tagged in. Actually manually entered, but I would still get tagged in if I put the buy limit. On the 15, there's not much to go off of. Looks like manipulation has happened to the upside because these two lows got taken, even though they're recent. Then an impulsive move, which is true. Fair value gap on the 15 as well. And then it took, I can't really say this is liquidity over here, because like, yeah, over here it just looks small, you know. So I saw this move and I thought this is good for a sell, as in terms of accumulation, manipulation, distribution. Tech previous highs, they had some accumulation, the manipulation, and then the distribution. But it's like at this area we hit full in this gap, there's one, there is, you know, momentum, bullish momentum. That's one. I haven't checked the volume, to be very honest, before entering this trade. On the hourly, well, it's still farming, but the volume isn't that high as the selling volume. In terms of selling volume for 10 o'clock, that's a large bar, but not really that much candle to go with it. I wouldn't say it's disproportionate, to be honest, because it's still a big enough candle, but I would just expect it to be larger if, you know, the move was really bearish. Still, take everything with a grain of salt. It's just factors to consider while you're in a trade, or while you're thinking about taking a trade, or even thinking about exiting a trade. But yeah, so on the 15, I marked out this area as the area of interest. I would like to see how price reacts in this area. So dropping down to the 5 minute, I saw, alright, we had this first low here, and then price started to come up a little bit, touch this fair value gap, which is very, very important. You see, in the previous video, one of the previous videos, sorry, yeah, in one of the previous videos, I mentioned that I like to see the same thing happening across multiple time frames. That's like a higher probability trade for me. So if I have a fair value gap, like the one that is here, present here on the 15 minute, I would ideally like to see this same fair value gap in the same direction be still open on the smaller time frames. Like not too small, sometimes it might not be open on the 1 minute or 3 minute, but 5 minute, especially if I'm taking a 15-minute trade, then I would like to see the same spacing available on the 5 minute. Why? Because more often than not, when the smaller time frames already fill the space or retrace into the space or the gap, then the larger time frame move might not respect that same gap. So I would like to see the gap remain open if it's a fair value gap that I'm interested in. Ideally, or luckily for me, this is not a fair value gap that I'm interested in. So seeing this already be retraced on the 5 minute by this high right here is a good sign. So when price got back up to this level around here, I was like, alright, fair enough, it might take this high and come follow retracement back to exactly where my entry would be. But more importantly, this fair value gap might not have what it takes to cause price to reverse and keep moving to the downside. But with trading, anything that's happened, that's just something that I noticed through my back testing and, you know, with my strategy forward testing as well. So let's see how the price plays out. I already sent this out to the community, so everybody in on the trade, and we're just waiting to see what happens. Gonna give you guys an update in a couple minutes and see how it plays out. My take profit is above the high that was farmed, that relatively equal high. The reason why it's above and not directly at it is, like I said, the market loves relatively equal highs. I like seeing relatively equal highs being farmed too, because I know it can be taken. When I see one high that's farmed or low that's farmed, is likely, or not likely, chances are higher that price might go to that and create a double top or a double bottom. But when it already get a double top or triple top, because you can have a double top and then it reverse, but the chances are, you know, less. So we can still monitor it once price gets up to that area. I ain't even know if it's going to the take profit is yet, but once price go up in every direction and it reach at that zone, we can still monitor it, and based on how it's looking, we either close, bring stop loss to break even, or if it's looking in our favor, you know, favorable, then we hold or extend the take profit. Not getting greedy, we just analyzing. So yeah, come back, catch y'all in a couple minutes. Alright, so it's about an hour or so later, a little bit over an hour later, and I actually entered another position right where this retracement is, around here, another buy. And I just wanted to give you guys that update before at the end of it I just come in and just like, I entered another trade. But I have reason, it's according to the strategy. I have back tests and forward tests behind why I entered two positions or a second position there. I mean, it was the same lot size. The risk was a little bit shorter than the first trade, so about equivalent risk to the first trade, just not the same position. I'm just giving you guys an update. Don't want to make the videos too long, like I said, so I'll just allow this to play out and check in with you hopefully soon. So we just hit this level that, right, we just hit this level. Sorry for sweating, but maybe I actually get some food and it's spicy, so I just wanted to pull out the camera and start recording because we have this level. And like I said, sometimes price does create triple tops, but more often than not it would break the relatively equal highs. Probably should update the group and let them know. Oh, one of my take profit just got hit. I don't know if y'all can see it there, but yeah. I don't know if I'm going to close this trade because we did take out the relatively equal highs and that's the lowest hanging fruit if for those ICT students out there. And the aim for the day is $100, so 95 ain't bad. 90 and all ain't bad. That is 5,969. Bro, from 5,500 and like $20-some or $80-something to like $30, $40 away from break even. That's a win, bro. That's a win. I ain't trying to like, you know, bitch out and close before take profit because remember I send the signal out. I also got hold. If I can close it, I gotta send it out to them before I close it. So, you know, all we either make it together or risk it together. I think I can. I know gonna say I think I can close, but it looked like it's going to. Let's see. Let's see. 4 pips away from take profit. 2 pips away from take profit. A pip away from take profit. I know, and but y'all disturb me from eating. Y'all excuse me. Boom. And we just hit TP. There should be this other TP right over here. Close on the phone. And then we manually close right here. Alright. And I could probably film a feed. No, I can get out the trade breakdown before I go back to food and all of them. But that was a good trade. That was a good trade, I ain't gonna lie. I'm excited as fuck. But you know, I'm trying to be professional. Trying to keep it yeah. So trade breakdown, we could start maybe from the hourly. Not too much to go off of the hourly. Let me just delete these. Starting here on the hourly, that gap that I was talking about earlier in the video, it's visible here on the hourly as well. I forgot to mention that. But there's a gap on the hourly dropping down all the way to the 15. That gap is also there and it was below old lows. So I saw that in the morning, price came up to this previous high here on the 15-minute and created a double top. After creating that double top, it dropped impulsively, which took out the recently farmed lows as well as filled that gap completely. Like this whole move here filled that gap and took an old low on the 5-minute, but that's not as important as it filling the gap and taking out this recent low. So according to my strategy, I was supposed to look for an impulsive break of any high that was farmed after this is before this is broken, or the high that farmed after this is broken, but it also, the low that high farms breaks the low that filled this gap, if that makes sense. So it's the same thing, but it's just the different ways it can happen. So dropping down to the 5-minute to find that high that I would need to be broken before I enter the trade. That would be this high here, but it's not so visible on the 5-minute. This high as well is valid because it's an intermediate high, because it retraced and, well, not necessarily filled this fair value gap, but it retraced into it. I don't know if I call in this intermediate high correctly, but that's what I consider intermediate high. I know there's also the intermediate high being the high with 2 higher highs to the left and right of it. So I think that fit the criteria too. So regardless, this could be a high that potentially, once broken, I have a trade. That's why I entered a second trade here. So that's the explanation for that second trade. But I also dropped down to the smaller time frame when price was below here, because I was watching the chart, and it's either the 3-minute or the 1-minute. I believe it's a 3-minute. Price just started to move impulsively, broke this high. Even though it's small, it's still a high. This is also a high as well, so I could use either one of the two. And this high in particular formed, or even this one, this high in particular, let's say this one, was formed after this low was formed. So this low that broke this recently formed low, it should keep pushing down if it's like downward momentum, because it's at this specific area. If it does not break and keep pushing, if this high here, why am I not marking? If this high here is broken towards the upside, after this low is broken, especially at this zone, this particular zone that price was at, then I am in for a buy trade to the upside. That's what happened. Price must break it impulsively, not just a small wick or anything like that. Impulsively. That's what I saw. That's why I called the trade. This is also a fair value gap on this side, and we notice fair value gaps on this side too. And whenever I see that, it's be like, hey, fair value gap and fair value gap, this cancel out each other. ICT never set up, but no, man. When I see them along with these other factors, then I say fair value gap and fair value gap cancel out each other. We went in for this trade from here and here because it gave us a retracement, and we out for I think it was $95 or $96 or something. So yeah, or $102. Oh, that's good. Cool. We're $18 away from break even on the account. This account went low, bro. I think let me just show y'all. Alright, I can show y'all that when we done in another video. I'm gonna give y'all a breakdown of like with trades and stuff. But I don't wanna make this video too long. That's it. I guess that's the end of the video. Catch y'all in the next one. If you found any value in the video, if you would like for me to explain anything more in detail, because I know I gave a pretty butchered up explanation of the strategy and why I entered and exit and all these other things. But if you want me to go more in detail and anything, you could like let me know in the comments below. Nothing else to be said. If you want to join the free Telegram as well, link will be in the description below. And yeah, you can subscribe while you're at it. But catch you guys in the next one.